some of the markets, they're absolutely flat with some negative bias, be it Hang Seng, be it Shanghai.
The swing low of 24,753 will be an important downside level which should be protected.
Ather Energy, which is backed by Hero MotoCorp, has filed for DRHP just last evening.
Aims to reduce dependence on biotech companies from China over the next 8 years.
Bank Nifty is up 0.25%, 51,258.
Also, the rate rationalization, it seems that government is now in a hurry to kind of do that.
Motilal Oswal has come out with a note where they're saying the IT services sector could be on the cusp of recovery.
We are the only organized family jeweler in the country.
It's mild green on the Nifty and the sensex. Mid-caps, though, are holding strong.
This is the right time if someone is looking for buying the car. Please go ahead.
The government has claimed that it has led to a drop in retail prices across India.
There's been sharp recovery from the lows that we've been talking about of late, and that so far has converted into higher gains for the markets.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Welcome to the program. This is Closing Bell. The day so far, as was sort of snapshot for you earlier, shows you what has happened. 170 points higher on the Nifty. It's a super strong day once again. And we're above 25,100. Well, it's all boys show. Prashant with me, my colleague Mangalam. Mangalam, hi.
Hi, we're the bell closers for today. What does one say? But you know, what's interesting is that everything that didn't happen yesterday happened today. Yeah. Yesterday, yes, there was a recovery in the second half of trade, but Nifty Bank was outperforming and the mid-caps were underperforming. Today is the Nifty Bank which is underperforming and the mid-caps are outperforming in how? 850 points on that index. Extremely strong day of trade so far. And just when we, started the show, we saw two flashes come by. One was that of Kumar Mangalam Birla buying stake in, Vodafone Idea, almost 1.68 crore shares in his personal capacity. The other one was the Birla Family Investment Trust, which is another listed company, Pilani Investments, buying another 40 lakh shares as well. All of that has caused a bit of a spike on that stock, which has otherwise been a bit of an underperformer, especially over the last few trading sessions. So that's something we'll watch out for. Pilani Investments, of course, has spiked on that news, but the bigger beneficiary here would be, Vodafone. The other one is this comment coming in from the Maruti CEO will launch an EV with a high range of about 500 kilometers using a 60 kilowatt battery. Now, Maruti typically is a late entrant into any category which is emerging, but once it does enter, it eats into that category. We saw that with the SUVs, we saw that with the passenger vehicles, and now if they enter EV with 500 kilometers, average run right now is 250, 300 kilometers. What if Maruti with its might enters this space with a 500 kilometer range? I mean, all those range anxiety news pieces will perhaps be, vanished.
So Pune and back.
Pune and back.
One charge.
With enough juice to stop by and have a vada pav.
Or maybe Bombay to Goa, right, one charge. I mean, anyway, but I'm not seeing a timeline to it, right? Because Maruti has said, and we've asked them about when this EV launch is going to be. They've said, from what I remember, sometime in 2025 or something is going to be the first EV launch. So this is a comment coming in from the CEO. We'll try and put more sort of shape around this in terms of when the timelines, etc., is going to be. And that idea news flow, and we'll go back to idea as well. So creeping acquisition by the promoter, right? That's essentially what this is. And stocks up about 2.83%. We'll have more, again, perspective on this in terms of holding and what this would mean, what percentage of equity. Should be very, very small. But more on this in a bit. Let me just quickly wrap out things on the index, right? Because we've got a strong day. And I just looked at what the rest of Asia is doing. And the market here is doing the best amongst what everything else is doing. Some markets are down, some markets are up. But here, you've got a pretty strong session through and through. Let's actually cut across to Delhi, where my colleague Parikshit is in conversation with Vijay Nakra, President Automotive Division in Mahindra Mahindra, for a quick listen in. Okay, Okay, I think what we'll do is we'll just have that up in a bit. Well, things.
Automotive division of Mahindra Group, Vijay Nakra. Vijay, thank you very much for joining us right now. You had over 75,000, roughly around 75,000 dispatches in the month of August. How does the festive season look like as of now?
Firstly, thank you so much for having me on your show. We are pretty bullish about the upcoming festive season. I think there are a number of indicators that point towards that. I think the election is behind us, the budget is behind us. We have the indications of a great monsoon. We've had good rains. The long-term period average of monsoon is up significantly compared to last year. The water levels in the reservoirs are 72% plus. 90% of the sowing land has been tilled with the Kharif crop. The price of crop or the grain coming to the mandis is better than last year. So all of this are clearly indicating to us that, also basis talking to many of our channel partners as we get ready for the festive season, the mood is pretty buoyant and we believe the festive season will be good for us.
So your competitors, Tata Motors, they've announced a lot of discounts across EVs and ICE between yesterday and today. So how are you matching up to the industry when it comes to discounts?
Well,
are we going to see some strong schemes from Mahindra Group?
So firstly, it wouldn't be right for me to comment on, what the competition is doing. But as far as we are concerned, I think if you look at many of our models, if I look at the last 3-4 months with, the kind of interventions that we've taken, whether we talk about the 700, whether we talk about the Scorpio N, whether we, talk about the Thar, I think to a very large extent we are seeing the demand come back up. We've also seen that the pipeline is pretty strong for these products as we get into the festive season. I've not spoken about the 3XO because that's a recent launch and we know that the waiting on that product is still reasonably high, and Thar Rocks we've not yet opened. But if I just look at the range of products which are already in the market with the interventions we've taken, we have not brought in any disproportionate schemes or incentives for the festive season, and we are confident with what we are doing.
Right. You had reduced the price of the XUV 700. Are we going to be looking at some more price reductions across the product line?
Well, for now, I don't think I would be able to comment with any certainty on that. Price correction schemes always depend from time to time. But I think there are also, we've spoken about this before, that one of, the XUV 700 over 2 years with the price increases it underwent, and with the commodity cycle giving us an opportunity to pass some of that back to the customer, to bring back demand, especially in a scenario where we increased our capacity from 6,000 to 10,000. We believe that was the right move and we can see the demand having come back. Are we going to do that in the rest of the products? I think these decisions are taken from time to time. But for now, we are seeing a strong demand on many of our products.
All right. Okay, well, we'll cut back to it with more as and when there are comments made. But for now, Mahindra essentially saying very clearly they've got no plans to cut prices, offer festive discounts, and they think that, well, their products are priced at the appropriate level as they head into the festive season. So stocks on your screen. So just to get back to the market, we've got, as I said, the market here outperforming pretty much everything else around the region. Nifty has gotten to the 25,000. It did get to, actually now I should say, because we've slipped a little bit, but we were trading comfortably above the 25,100 level. Now, that is essentially the 61.8% retracement to the fall from the all-time high, which is 25,333. And we were trading above that level. We've just fallen under it as we speak. Logically speaking, I mean, the next target, I mean, you essentially looking at a takeout of the all-time highs, right? And above the 25,100 level, if we are able to hold it, will it happen now? Will the market give it some time? Will it happen around the time of the Fed meeting, which is later on the 17th, 18th? Will we wait that long? Those are things we'll have to see. But with this kind of a day, it looks like perhaps the market is in strong hands. Bank Nifty is also trading above the 61.8% retracement of its recent fall. Not from the all-time high. The Nifty Bank never made an all-time high. So it's a smaller price decline. and that is 51,222. We're at about 51,279. And sectors, IT is doing very well. Pharma as a sector is doing very well. And you've got mid-caps, which are also participating, in a pretty decent fashion. We've got Mitesh joining us now with a quick check on things in terms of specific index levels and trades that he'd want you to take. Mitesh, good afternoon. Your thoughts on what we're seeing out there and your fresh trades?
Yeah. So Prashant, I think, much stronger than I expected kind of a pullback. We were looking at 25,050 and then 25,150. We nearly tested the second supply pivot, which is a good thing that the market was able to show strength post that big decline. And 25,150 is an important area. That's, where the retracement comes in, intraday averages come in. So I think in case we don't clear it, then it might be another day of choppiness between 25,150, 25,800, 850. And then after 1 or 2 days of consolidation, we should start moving up. So trade with stock specific bias for the time being. I have a sell on REC with a stop at about 588 and a target of 555, and a buy on PVR Inox. It's a buy with a stop at about 1580 and look for a target of 1660.
Right, positive on PVR Inox. A lot of brokerages also incrementally positive on the fundamentals of PVR Inox, given the sort of box office collections that have taken place over the last couple of weeks or so. Mitesh, we'll come back to you in about 40 minutes or so. In the meanwhile, just keep an eye on a couple of these options. With the Nifty having moved to levels that it has, we've seen the 20-day moving average easily being breached in yesterday's trading session, and that now stands as a key support zone as we're looking at it. For the Nifty Bank, it's an interesting setup because it conquered the 20-day moving average yesterday, crossed past the 51,000 mark, around that 51,250, but the 50-day moving average stands in the way of an up move. So there's a bit of a resistance for the Nifty Bank at the 51,400 mark as well. In the last 30 minutes, we'll have the financial services expiry play out. So Fin Nifty options, if you're looking at it, the index is currently at 23,650 and 23,650 put is extremely active. So maybe close to around 23,630, 23,640 is where the support is. If it breaks that down, then maybe we'll see further long unwinding out there. But on the way up, 23,700 call is extremely active, talking about a resistance out there. For the Nifty, 25,000 call writers still holding on with a premium of 100 rupees, telling you that if the Nifty holds above that 25,100 mark for a formidable period of time, maybe there could be short covering. There already is short covering at the 24,900 call, but at the same time, there's writing at the 24,900 put as well, telling you support around 24,850 and resistance upwards of 25,100 as well. But let's go across to Vivek now. Vivek joins in with a bunch of stocks which are buzzing around. The one on his radar today is, which one, Vivek?
Well, the one that we are looking at today is Tata Power. Last evening there was some news flow that the company actually reported to the exchanges. So what was the news flow? Number one, the company said that they've gone ahead and commenced solar cell production at the 4.3 gigawatt solar cell and module manufacturing facility that the company has in Tirunelveli in Tamil Nadu. Now, it's 2 gigawatt as of now. The company expects to ramp it up further to another 2 gigawatt capacity that will be added over the next 4 to 6 weeks. Now, remember, the module production line has already been commissioned and has been operational since October 2023. Now, why are we focusing on this particular piece of news and why are we analyzing this in detail? Remember, very recently you had a new kid on the block, a company called Premier Energies that got listed, and that business is very similar to the solar cell as well as module manufacturing facility of Tata Power. Now remember, Premier Energy is launched its IPO. When you talk about the cell line capacity over there, it's 2 gigawatt, and the module manufacturing capacity over there, it is 3.36 gigawatt. When it comes to Tata Power, capacity is 6 gigawatt and 4.5 gigawatt respectively. While Tata Power has much higher capacity, one thing to note is that as far as the entire solar value chain is concerned, Tata Power does most of its work for its own captive projects, while Premier Energy will mainly go ahead and sell it to other or third-party players. Now, talking about the order book, Premier Energy, the solar modules order book, when you're comparing it, is at 3,825. Solar cells is at close to 1,900 crore. Tata Power, while they do not disclose the internals, the total order book for the solar EPC business is close to 15,640 crore. Now, what essentially is driving the excitement as far as Tata Power is concerned is that so far, most of the analysts on the street actually valued both the thermal as well as the renewable business at par. But very recently, analysts have started changing their stance. In fact, UBS had done an initiated note on Tata Power in July 2024, over there, they had given a target price of 510, and very interestingly, they went ahead and valued the renewable energy part of the business at 20 times EV to EBITDA versus just 10 times EV to EBITDA that they were giving the thermal business. They expect 27% of the total EBITDA that the company saw in FY24 coming from the renewable energy to go to almost 50% in FY29, and that they believe deserves and warrants a much higher valuation multiple.
All right, take that point. That's about Tata Power UBS view. We also have Hemang Jani joining us now. Hemang, good afternoon. Welcome to the show. Tata Power, big gainer. What are your thoughts on this one?
Good afternoon, Mangalam. I think Tata Power has underperformed in the last, let's say, about a quarter or so. And while there is so much of excitement about the EV and the solar cell and the investment that Tata Power has made in the last, let's say, 1.5 years, what remains to be seen, Mangalam, is what kind of numbers are we really going to see in the near term? Because globally, if you see many of these, new technologies, particularly EV, solar, and many more, they are going through a bit of a corrective phase. Even the pricing in China suggests that there is a, some sort of a downtick. So while we do get excited about these, newer technologies and green energy, I think it would make sense to wait and see how the numbers or the earnings shapes up. So I would, stay away from Tata Power and all the related names, at least in the near term.
No, got that. The sector of the day is, of course, clearly IT, right? The Nifty IT index, the last I checked, was up some 2%. So it's a big mover. Lots of stocks are jumping. And Motilal's note, I think, is what has done it, at least today. They've upgraded their rating on the entire space. Rima is here with details. Rima, over to you.
Thanks so much for that. So Motilal Oswal, as you pointed out, has come out with a very long thematic research in the technology sector, and they believe after a very long period when we saw discretionary spending getting depressed, cut back, we're now on a path of recovery. So they have 4 top picks in the sector. So they like the entire sector. They have no sell call, only buys in neutral. But the top 4 picks that they have are HCL Tech, LTI Mindtree, Persistent, and the 4th one is Coforge, where this company has, where Motilal Oswal has upgraded it to a buy with a target price of 8,100. As I said, no sell calls. They've got a few buy calls like TCS, Infosys, LTTS, Cyient. They've got a few neutral calls as well. Also, according to their deep dive survey, there are 3 sectors which will lead the recovery. One is healthcare, the second one is manufacturing, and the third one is BFSI. So healthcare faces no risk of disruption because of the rise of GCCs. GCCs are global captive centers. Secondly, BFSI benefits from the interest rate cutting cycle in the US, but there is that threat of GCC, and manufacturing we know has done well. So HCL Tech is a beneficiary because they've got a high exposure to healthcare. LTI Mindtree, another stock that they like, benefits because its data engineering capabilities position it well to capture the Gen AI spending. Persistent has strong exposure to BFS and the healthcare sector. And Coforge, they've upgraded the valuation multiple, and they believe that Coforge will be able to extract the cost synergies from its Cigniti acquisition.
All right, Rima, thank you very much for that. Hemang, in this space, the IT services, you heard Rima there. This is, of course, a Motilal note. So what's top of mind for you? What strikes out to you?
Prashant, post the quarterly numbers and some of the key indications, particularly the fact that the hiring is back, some of the verticals are showing signs of revival, particularly BFSI, healthcare, etc. So from that perspective, as far as the large cap IT services are concerned, clearly HCL Tech and LTI Mindtree are the 2 names that should do well, and there is a certain amount of valuation comfort also. Whereas on the mid-cap side, Prashant, we prefer some of the India-focused companies, be it Naukri, where you have, the core business, returning to normal phase. Plus, you have added trigger in terms of Zomato and, couple of portals that they have. Apart from that, I think Zomato as a platform company has consolidated post the block deal, and the quarterly numbers are going to be quite, interesting in terms of Blinkit. So Zomato is something that we've been liking, and we think that there is some more upside, about 18-20% even from current levels.
Wow, 18-20% from even current levels. What's interesting is the jewelry space. That's been a buzz in today's trading session. Titan has moved to the high point of trade, currently sitting with a gain of almost 1.5%. If you look at it over the last 2 weeks or so, Titan has rallied about 6 or 7%. Remember putting out this piece on Editors Roundtable, Prashant, that over the last 2 years, Titan has done okay-ish, but the others have done a lot better. So 2 years ago, Titan was trading at 64 times, whereas Kalyan was trading at around 20 times. 1 year forward, with the kind of move that we've seen on Kalyan, Senco, etc., and the underperformance of Titan, Titan's multiple was close to 60 times, whereas the others were close to 40 and 50 times each. So the valuation gap of Titan and the others narrowed so much that maybe a lot of brokerages also are now looking at Titan as an attractive bet. Hemang, do you track the jewelry space? There you have it. 158, 9% over the last 12 months for Kalyan Jewelers versus Titan, just about 17%, and most of those 17% have come by in the last 20 days or so. Great work by the director here. Hemang, your thoughts on this space, and also if you track PN Gadgil, because the IPOs open today. Wonder whether you've seen something about the offer here.
Yes, we do cover jewelries as a space, and first of all, this PN Gadgil, I looked at the numbers and the issue per se, and clearly it looks quite interesting because right now it is focused more in Maharashtra with about 38, 39 stores. But when I look at the overall growth, it looks quite interesting, about 35% kind of a growth, a very high ROC and ROE, about 27, 28%. The only thing when I compare this with something like a Titan or maybe some of the other companies, the operating profit margin is about 4%, which is not bad. So I do think that though the valuations are 42 times on the issue price, this should do well given the excitement which we're seeing in the jewelry space per se. And apart from this, we do think that something like a Senco Gold, which has done very well and which again has a very high return ratios, and last 3 to 4 years growth has been more than 20, 21% with a fair degree of visibility on the expansion. So I think these stocks are extremely well placed given the growth trajectory and valuation comfort.
All right, Hemang, we'll leave it there. Thank you very much for joining us. Good to have you with us here. Thanks for your time. We'll take a break as well. We'll come back with Tushar Pradhan of Hexagon Partners on the other side for some more market conversations. Stay tuned. Okay, welcome back. 120 on the Nifty. So there is a little bit more give back, right? Now from the day's high, that's almost about 65 points in terms of a sell-off that we've seen. It was looking exceptionally strong. I mean, it's still a strong market, just under 0.5%. But we seem to have, got to that 25,100 mark. The day's high is 25,130, and then that pretty much was the high, and then we've come off to 25,060 or so. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good afternoon. Good to have you with us here. I hope I got that pronunciation right. Just a quick view on things. There's no stopping this market, and 0.5%, 100 points. Globally things are looking a little more quieter. We were a little quiet early August and maybe a little after that as well. But I don't know if we've got a trend on the upside once again. What's your sense? Could we see a sustained move higher, or you think only once we have, the Fed decision around the 18th of September, will global markets really give a real sense of which way we're headed?
I think there has been a lot of strength in our markets, and that's something which is known for a while now. While there may be some bouts of, I would say, stability or maybe even slightly negative in the interim, I think the fact remains that you have tremendous macro tailwinds, ensuring that, you're not going to really get, a big shock to your market at any point of time. And as you mentioned, I think if there is something to do with the Federal Reserve and the decisions there, I think there might be a little bit bigger surprise in November, which I think most of the markets may be unprepared for. So if you're really looking at a risk, I think beyond the Fed move, I think the November election in the US is going to be a very significant direction to where markets will go in the interim, because these are two very distinct doctrines in terms of where the economy in the US is likely to go. And as you know, where the US economy goes, the world follows. So it's going to be a very stark change if there is a very dramatic, outcome in the US, whichever it is. And I think that is something to really be a little wary of. But I think currently, I don't think there is anything in the Indian markets to dislodge it from the strength. You've got tremendous domestic liquidity. You've got slightly increased interest from the foreigners. You've got tremendous corporate earnings as well as growth coming through the economy. So really nothing to worry about from that perspective.
Well, tremendous domestic liquidity. You said it, nearly 23,500 crores in terms of SIP for the previous month. The data just came by, and while the street was worried about mid caps and small caps, so the money is going into large caps. Yes, the money did go into large caps, close to 2,600 crores, but it also went into mid caps and small caps, close to 3,000, 4,000 crores each in both those funds. If I remember correctly, Tushar, you've been a proponent of low ticket rural consumption names. Over the last few trading sessions, in fact, last few weeks, the FMCG sector has come on its own. Rural's doing, well. The expectation is that post-monsoon, ahead of festive season, things are likely to look up after what was a long-drawn summer, or rather winter, for this sector. What are your thoughts here? Is there any name in particular that you like?
Well, I wouldn't like to name any names, but as I said, the general concept is that rural demand has been very weak throughout the last year. And that has been, really seen in the fact that fertilizer consumption, cement, all of the industries which actually took benefit out of domestic rural demand were really suffering throughout probably most of last year. Now, what has changed is that we've got an above average monsoon. If you look at the reservoirs in India, I think they're at maybe 104 or 105%, if I'm not mistaken, in terms of the total reservoir reserve strength now that we have. And that makes for a very, very good Rabi season, which means that potentially the winter crop is going to be bumper, in addition to whatever you may have as a Kharif season coming through the harvest even now. Now that really spells for the fact that there is a tremendous amount of latent demand which was not satisfied last year, which is likely to follow through. And I think that it's a good, really portent of things to happen, because it really lifts a lot of sentiment across a very broad spectrum of the population. So it is not only urban centric that we are looking at demand, but we are actually now at the cusp of possibly having a very, very sustained across the board recovery in the economy. And that will, of course, lead to very significant GDP growth as we add that up towards the end of the year. So I think rural demand is likely to be very key to sustain market activity, because then it will now float to companies which actually serve that. And it's up to you to find out, some of the companies which are actually, out there, which are at the forefront of such consumption.
Consumption of another kind, right? Global Spirits is up 14%. Stocks are about 1243. And look at like something like Tilaknagar Industries, 7%, 7.5% higher. That's been a big mover actually last few weeks.
We had Tilaknagar Industries on our channel yesterday. In fact, they did say that the new liquor policy that would come by in Andhra Pradesh would help increase their volumes on a compounded basis of close to 8 to 10% over the next 3-4 years. And their new business, which is flavored brandy, they call it Flandy, that has done extremely well. Just one launch and it's about 10% of the mother brand. So all these factors are playing out for them, and they are obviously turning debt-free this year.
So 7 to 8% incremental on top of what they were already doing.
CAGR, yeah,
just because of Andhra.
Just because of Andhra. So basically 85% of their revenues come in from South India, nearly 30% comes in from Andhra. They were looking at the delta between Andhra and Telangana. Andhra volumes have been largely flattish over the last few years, and Telangana, because of this excise policy, has compounded at around 10 to 12%.
I see.
So if you look at Andhra's base, then maybe it's not out of whack to assume 8 to 10% compounding if the new policy is in place. Of course, all of this is subject to the new policy coming into place with effect from October 1st.
But it is coming into place from
That's
1st of October.
That's what
Or is there
everyone...
Is there a...
I mean, it is a when, but we don't know until it's done, right? That's policy.
Okay. But because these things would be notified. I mean, there'd be a starting date, implementation date effective. But we don't...
We don't have anything official. We don't have anything official yet.
All right. So expectations at this point in time. But yeah, I mean, this is a really nice large move that we're seeing. Stocks up, I think, about 35-40% for the year so far. And this month is turning out to be pretty good as well. Tushar, do you track any of these companies, alcohol companies?
Not particularly, but I think there is a tremendous demographic dividend that I think we should look at from looking at these companies as well, though I'm not particularly interested in them as such. But I think one of the things that India will clearly graduate to is increased penetration of consumption which are income related. So I think most of the bottom of the pyramid kind of stories are already covered. But I think what we are really looking at is premiumization. So within that pack, I think what I would be interested would be, how much of that is really impacting the higher end. And because the higher end has not really been penetrated as much, there may be reasons to believe that there might be some more interesting longer term trends which are coming out in that field. When it comes to some of the more basic liquor products, I think that's something of a story which is normally not that exciting from my perspective.
All right, take that point. Always a pleasure speaking with you, Tushar. Short, but a very insightful chat that we've had on the market so far. Speaking about the markets itself, the 3 p.m. move for the Nifty Financial Services has been on the downside. So we were talking about some support coming in at 23,650. That actually has broken. Now the Nifty Financial Service Index is just 30 points above that 23,600 mark. 23,600 put writers are also fairly active. So will it support? Will it take some support at those levels or not? Is one of the questions that we'll get an answer to over the next 10 to 15 odd minutes. But that's reflected in the Nifty Bank as well, which now is holding with gains of just 125 points, and the Nifty 2, which was closer to that 25,100 mark at the start of the show, is now just above 25,000 by the skin of its teeth. It's fallen a fair bit from the highs as well. So we'll keep an eye out on the markets. But as we do that, also let's listen into some exciting conversation that has come in from the management of Ashok Leyland. They expect a big pickup in the demand for the CV industry starting October. The MD and CEO Shenu Agarwal spoke with Parikshit Luthra.
We are in a situation where there are conflicting views coming on the CV industry. And from our perspective, I just want to give you a little bit of background before I come to, the whole year's view. At the beginning of the year or before the beginning of the year, most of the people thought that H1 would be very, very down. Some of the agencies were even forecasting H1 with a 15% degrowth. Even for the whole year, I think most of the industry was of the view that we will be doing less than last year. However, I think with the Q1 behind us now, which has seen significant growth in CV industry, I think the view has changed. Even some of the recent reports from the research agencies are now suggesting a positive growth in the CV industry for the whole year. I think more or less we think that it will be a positive year, not just overall, but also for MHCV, even for trucks, it should be slightly positive. Buses are doing already very well. I think light commercial vehicles should also start doing well. I think the only argument that we are having right now is July and August have not fared that well. But I think we believe, at least at Ashok Leyland, we believe that it is a temporary phenomena, and it has been caused because of two reasons. One is inordinate rains. Because of that, I think the momentum has slowed down. And the other is that post the elections, the uptick in the construction projects and infrastructure projects has been slightly on the slower side. But I think both these things are going to change very soon. And we are very hopeful that from October onwards, the industry will see an uptick.
Okay. Any ballpark figure or percentage in terms of growth that you're looking at?
I don't want to guess a number exactly right now. But I would say that on the truck side, we are hoping it will be single digit, maybe somewhere between 3 to 5% on the heavy duty truck side. I think buses are doing very, very well, so bus will continue to do well. And LCV also, I think, would see some growth in the second half of the year.
What is the current capacity utilization?
Capacity is not a constraint. At Ashok Leyland, we are roughly at about 70 to 75% capacity. So we have a lot of headroom. But I think at the industry level also, capacity is not a constraint.
Right. When it comes to capital investment, give us a sense of where is the bulk of your capex going for this fiscal? And could you give us a sense of how much would you like to invest over the next 2 years across technologies?
See, most of our investments would be in the area of the new technologies centered around alternative fuels and electrification. That is for sure. We know that this industry is going to adopt electrification or alternative fuels in due course of time. And it is very important that not just we invest in the technologies for the future, but we also mature these technologies to a level where they become very affordable so that adoption can happen. Right, so most of our capex, not just in the year, but also in the next few years, would be in this area. Other than this, there would be just normal capex, which would be just sustenance capex. I don't think the industry or Ashok Leyland, I can say for sure, would have to invest too much on the capacity side in the next few years.
Now, when it comes to the FAME scheme, have you faced any kind of issues with FAME 2, and has there been any recommendation from you to the government either to widen the scope or maybe make some policy tweaks for the CV industry specifically?
Nothing of any significant nature from the CV industry point of view. Of course, the buses, the city buses and the LCVs were already part of FAME 2. We would like that to continue because I think the industry needs support for next few more years. In these two segments. In FAME 2, we did not have the heavy-duty trucks included last time, and therefore we are hoping that the government would also bring in heavy-duty trucks under the FAME.
Okay, we'll take a break here. That's the management of Ashok Leyland in conversation with my colleague Parikshit. We come back with D Street Chatter. Nimesh joins us for that, and some trading ideas after that. Stay with us. Okay, welcome back. I mean, this is a bit of a drop down from the day's highest point, as we've been telling you. So from 25,130, the markets dropped off by about 80 points or so as we trade with about, 20 minutes to go for market closing. Well, let's get you what's happening on in dealing rooms. And Nimesh has been working the phones as always to get us a real-time sense of what's going on. Nimesh, take it away. What are you picking up?
Hi, Prashant. Marginally off days high, but still a good day for the market, largely backed by institutional buying. So I understand there are very strong buy flows today. The indication is the buy-sell ratio is close to 3:1, which means 3 buys for 1 sell. So that's the kind of momentum which is there from the flow perspective. Technology has done well today, largely on back of multiple upgrades which have come in the last few days, and also the Oracle numbers were quite strong. So that's one leg which has actually helped the markets do well today, and that's one space which is well bid as well from larger FIs. Even the broader market has done well today. The index is up 1%, but again there looks like it's very concentrated to few sectors. So even in the broader market, technology has done well. Select Pharma has done well today. So as I said, a strong day backed by FI buying, and looks like the momentum seems to be clearly with tech and pharma stocks.
All right, so that's about the market setup. Nimesh, what are the individual stock news pieces that you've picked up?
Well, so the first stock on my list today is Polycab. That's been buzzing in trade. The volumes are on the higher side. I understand there are very strong buy flows from larger HNIs, and also the street is anticipating a large order win for the company very soon. So that's the first name. The second stock is Vindhya Telelinks, a small stock, 2,700 crore market cap, thinly traded as well. In fact, the stock has done nothing since the beginning of the year, just up 8%. But I understand a leading PMS is an active seller and can be cleaned out very soon. So that's something to track in Vindhya Telelinks. The third name is Brainbees Solutions, First Cry. Again, that's been consolidating post the listing, been pretty much flat off late. But again, I understand the accumulation has started at a leading FI desk in Brainbees for a long only fund. So looks like some bit of delivery-based buying happening there. And the last one is Coforge. Big move in that stock. Rima explained on the back of big upgrades coming in. But in general, there has been very strong buy flows across technology names, and Coforge stands out. So expect very high delivery volumes in Coforge today.
Absolutely. Nimesh, on this Voda idea, that creeping acquisition which we flashed, which we put out, it's a small amount, but how is the street taking it?
Well, as you rightly pointed, it's a small amount. If you just add the number to close to 2 crore shares, even if you assume at 13 rupees per share, which was the low on Friday when the stock ended 10% lower, it's amount to just 26 crores. But it's all about statement, right? On a panic day to come for the promoters to come out and make the statement that they are looking to buy. And also, if you remember, Prashant, the preferential to the promoters was done at a much higher price, around 1480. So again, it makes sense from a promoter point of view that they did the pref at 1480 and to come and buy at 13 odd rupees. So I guess that's the more of a statement to me than anything else. A small buy of 2 crore shares, both by Kumar Mangalam as well as Pilani Investments. And we were aware of it, right? This was part of my chatter list yesterday, that watch out for a creeping acquisition announcement which can come very soon.
Oh, no, absolutely. That's bang on. Nimesh, the other one I want to just quickly run by you is Z. Was up, I think, 4-5%. Not sure if there's any news flow or any buzz around this one.
Well, again, the stock is buzzing in trade today. The volumes are on the higher side. Then, the chatter on Z keeps coming every now and then that again, the deal has resumed, the talks have resumed, and there could be a potential deal and all. I'm not too sure on the deal part, but just to highlight the management, which is Puneet Goenka, he is actually in person attending the CLSA Hong Kong conference. So 2 days is going to be there and he's going to meet a lot of investors. So maybe that's created a bit of excitement, but not sure on whether there is any deal which is around the corner in Z.
All right. Z is never short of any sort of news coming by around that stock itself, and currently buzzing around with a gain of almost 4.5%. Typically, news follows the stock price move as against other way around. Let's welcome Mitesh Thakkar now to tell us about the tomorrow trade. Mitesh, you're back with us. What have you made of the market over the last 1 hour? Anything that stands out?
You guys are discussing Tata Power. If somebody missed a long trade there at lower levels, it tends to be taken as a BTST. Keep a stop at about 441, 454, 455 could be a good target for tomorrow. So that's one. And the other stock is NTPC. In a stock which is corrected a fair bit, is trying to bounce back from oversold levels. Here, keep a stop below 394. Look for targets of 401.
All right, take that point. So there's Tata Power and NTPC as buy today, sell tomorrow. If in case you've tuned in just now and looked at the market doing extremely well, let us tell you that the sector of the day clearly has been the pharmaceutical space. A big move coming by on names like Divi's Lab, which has been extending its gain. Also, was a recent underperformer, will be exiting Nifty. Typically, when that happens, stocks tend to bottom out, and from there itself, it's seen a decent rally up around 5% for Divi's Labs, and we've seen some traction in a lot of these other pharmaceutical names as well. Case in point, Alembic and Laurus Labs, Ipca Labs, etc., which are seeing a lot of long positions being added. And the biggest reason that can be attributed to this is the US House of Representatives on Monday passed the Biosecure Act. And how will this impact the pharmaceutical companies in India? Ekta joins in to explain. Ekta.
Well, thanks for that. The US House of Representatives has passed the much discussed Biosecure Act, which now heads to the Senate for a vote. The act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of Wuxi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Laurus Labs, Piramal Pharma and Newland have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to possibly start with smaller projects first. Laurus Labs, for example, anticipates a gradual shift, while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunity. Syngene has said that they are participating in pilot projects related to the China switch and have seen a 50% rise in requests for proposals in the quarter gone by. Divi's Labs says that they are seeing opportunities in phase 2 and phase 3 and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese, non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis.
Take that point completely, Ekta. We had, Mr. Dagli coming in the afternoon as well, said that year 1, nothing happens. Year 2, little bit is what you hear. And it's the year 3 where you can actually see the opportunities being played out on a tangible basis, even though the opportunity is about 5 to 6 times what the largest player in the country is right now. There's only some part of it that we can benefit from. We'll keep an eye out on the space as it develops. Take a short break. On the other side, we talk about the market technicals. Jay Bala of Cash the Chaos joins in with his views. Welcome back. The Nifty holding around the levels that it fell from and to, so not falling further. The financial services index as well holding at lower levels as well. So no real problems for the market. Yes, there was a bit of an downtick from the highs, but not doing particularly badly. Jubilant Foodworks, that's a stock which is up nearly 4%. It's been one of those sleeper hits of the season. It's up almost 60% from March levels. In March, it hit its 52-week low, and from there it's rallied about 59 odd percent. So pull up a 6-month chart, you probably realize the kind of ferocity of move that has happened in the 3 months. 28%. Things are coming together for this pizza maker. But how the things are placed for the market itself? We have Jay Bala from Cash the Chaos joining in. Jay, we saw a bit of a rally all the way to a record high in the previous week, and the last week, the week thereafter it was a lot of profit taking. Point to point on a 2-week basis, we were absolutely unchanged. Now as things stand, what are your thoughts on the market, and where do you think are the risks and the opportunities?
Yeah, good to be here, Mangalam. See, the market is trying to build a theme, in my opinion, into food, clothing and chemicals, not shelter, food, clothing and chemicals. And we'll get to that in a bit. But whereas support for the Nifty comes at about 24,770, which it tried to break in the previous session, but just touched it on an intraday basis and recovered from there. And as I pointed out last time, weak seasonality is the headwind for the market. And also, I pointed out on 20th of August that Reliance coming rejection from 3,100 will also be a problem pocket for the market. So the market is doing that. Reliance has come off from 3,100 and trading at about 2,900 and change. So that's the headwind for the market. But as long as 24,770 is protected, the market seems to be in a safe spot. Once 24,770 gets taken out, we're likely to see the market drop somewhere close to 23,800, and the volatility is likely to kick in further.
So then on the downside, what levels, Jay?
Yeah, after 24,770, I'm anticipating the market to go back and test the August lows of 23,800 and change, and that is an intermediate support at 24,400. So that's the midway point, stop for the market. And likewise for the banking index, as long as it stays above 5,800, it seems okay. But the banking index is shade weaker. The only strong stock, in my opinion, is ICICI. Like I pointed out last Tuesday, it was not a breakout, and the markets have behaved in a weaker fashion, particularly the banking sector. So only above 51,960, you can see strength in the banking sector.
51,960. We're at about 51,300 at this point in time. And the recent swing high was 51,750. And you're watching 51,960 here as far as the banking sort of breakout is concerned. Okay, all right, got it. Now, just a quick word on the US indices as well. Jay, what's your sense, both the S&P and the NASDAQ?
Yeah, if the NASDAQ were to bounce, it must bounce today. It's come to a very important support and pause over there. The S&P has got a support somewhere about 5,300. So probably, if the markets were to crack, it's going to crack today. If it were to recover, it's going to recover today. So it's going to be a very important session for me. So watching it very closely. Still with the view that there is one final higher high pending for the S&P. May not be for the NASDAQ because there's tremendous amount of weakness in the SOX indices. So it might be the new high for S&P, or if there's a new high for NASDAQ, it might be a new high that falters. So,
all right.
So probably the last leg of the move for the US markets.
All right. Thank you for joining in. Just hang in there. We'll come back to you after market close in our special Markets Forward segment and perhaps explore more into this food, clothing and chemicals space that you're talking about and seeking ideas there. So viewers, just stay tuned. We'll address the market close, and thereafter in our special program, every day post markets, Markets Forward that is, we will continue our conversation with Jay Bala as well. But let's recap, Prashant.
No, absolutely. And, good session, right? I mean, 100 plus points on the Nifty, although could have been better, but, it's all relative. But nothing to complain really, because yesterday was a strong day, 200 points off the day's low. Today, of course, a little bit off the day's high, but still 100 good points day on day. The Sensex ends about 400 points higher. The Nifty Bank ends about 1/3% higher as well. Actually, technically, it's a pretty classic day because, I mean, we put out that the target at about 21,100 in the morning on the Nifty. The high was 21,130, so touched that, moved above that intraday for a very brief while, and then it respected that, and we've moved back down once again. Sectorally speaking, IT standout sector of the day, about a 2% pop, almost just under 2% by close. Yesterday, the PSUs were a big laggard. They were not a big participant one way or the other today, but managed about 0.5% higher kind of a close. The other sector were the FMCG and consumer areas, which were big outperformers yesterday. Today, I mean, on your screen, little quieter in those parts as well. Market breadth, pretty solid. Long list of big volume-led gainers is what you had today in terms of trade. As far as losers on the Nifty are concerned, actually two stand out, which we've not discussed that much. We'll talk about them in just a bit. Life insurance names, actually. HDFC Life, SBI Life, both cracked 4%. And you also actually had ICICI Lombard, which was down in a trade. I think there was a brokerage call. For life insurers and general insurers, we've seen monthly sales, monthly numbers, premium numbers which have come through. And there seems to be, at the margin, a bit of a slowdown which has been observed vis-a-vis the prior month, which is July.
Additionally, no relief coming in on the GST front as well. The GST Council referring it to an expert panel as well. But no problems for the mid-cap end of things. In fact, the mid-cap index did extremely well, ended 700 points higher. Nearly 3 stocks advancing for every stock that declined. And that distance between the advance and decline was maintained through the course of the session. We had Tata Power, which was up about 7% among the top F&O gainers, started its solar cell production. First Source was up 5% as well. Rima spoke about Coforge, brokerage is positive on that front. Indian Hotels continues to do well, and we did see some traction on Z as well. Among the top F&O losers, optically Vedanta was lower by 4%, but remember the stock went ex-dividends, so not a decline, so to say. Oil India was lower, as was PFC, Canfin Homes and JK Cements. From the broader markets, the pack that stood out today was definitely the Alcobev pack, where you did see some traction in names like Globus Spirits, also Tilak Nagar Industries, GM Breweries, all of them gaining anywhere between 8 to 13% So we'll keep an eye out on all these things. All said and done, great set of a session for the mid-cap end of things. The front-line indices, of course, we did see a triple-digit gain on the Nifty off the highs of the day, but definitely well off yesterday's close as well.
All right. Well, I think, we're going to say goodbye for now because you're going to see us on the other side in just a bit from now. Markets forward, we'll pick up on all the